Good afternoon or good noon or everybody. This is part of the webinar series that ACRA offers to all its members. We try to do this on a monthly basis. We either have a webinar or a conference. A conference being a larger assembly where we invite other people. So we have here right now 60 participants, and some are still coming in from their work or from their lunch perhaps. But we can start. I would like to welcome the representative from Saigon Rating in Vietnam. They're not officially members of ACRA yet, but so that they can have an idea of the kind of activities we have invited them to our special uh, observers, participants in this webinar. So welcome our dear friends from Saigon Ratings from Vietnam. Welcome to all of you. How many are you, might I ask? Oh, there you are. I can see some of you there.
Hello. Hi. Good
Hello.
afternoon.
Welcome.
Thank you.
Welcome.
Thank you for having us join this meeting.
I think
So we
particularly.
have here with us all of our analysts.
Yeah.
Yes.
Oh, welcome. And
Yes.
we expect you to be participating. We will have another one in next month, and one in September, and one in big thing in November. We will tell you all about that. So, but for
Okay,
now,
thank you.
yeah. Okay, good. So let's proceed, and let me do an introduction already of both our speakers. Uh, Perhaps, Mitch, can you just project their biodata profile? Who shall be the first? We have two great speakers we were able to invite for this afternoon. We first have with us Mr. Razib Ahmed, who is the Vice President of CRISIL, and he heads the SME ratings. Before that, he was also with another credit rating agency, CRAB, Credit Rating Agency of Bangladesh, and was head of business development in that company. He has had many rating assignments, financial institutions, large corporates, structured instruments, projects, and he has been actively engaged. This is the important thing. He has been actively engaged in methodology development for our addressing credit, what do you call this? Development for assessing credit worthiness and credit ratings for urban local banks of Bangladesh. He holds an MBA in finance and banking from Dhaka University. Razib will be our first speaker, and after that, we'll have a short question and answer session. And then we shall have our second research speaker, Mr. Kalpesh Patel. And may I introduce him now? He is director at K Ratings Limited. And you can see in the slide right now. Mitch, can you project the personal profile of Mr. Patel? He is rating head with 17 years of rating experience, and he oversees the portfolio of over 400 mid-corporate portfolio of Western region of India. And so that's a big assignment, Kalpesh. And he is a member of the larger K rating committee. Again, here's the important point about him again for our webinar this afternoon. He has been actively involved in criteria and model development for credit rating of FNEs. So, ladies and gentlemen of Accra, we have our heavy credential resource speakers for this afternoon. We will give them 20 minutes, more or less, for their presentation. We are quite flexible on this. And we will have 10 minutes of question and answer, but these are all very flexible. And depending on how our conversations go, we shall be flexible with our time allocation. So thank you again for your participation, for taking time out to join us. Let me now ask, therefore, Mr. Razib Ahmed, Vice President of CRISL, to make his presentation. Razib, please.
Okay, thank you, sir. I'm Rajiv. Can you hear me? Yeah.
Who's handling the PowerPoint?
Everybody hear me?
Are you doing it yourself, Rajiv?
Everybody hear me? Hello?
Yes, Rajiv.
Yes.
We still don't see your screen.
Okay. Hello. Assalamu alaikum.
Yes, we hear you.
I am Rajiv Ahmed from CRISL, Bangladesh. Before starting my presentation, I want to give my thanks to CRISL, Bangladesh and Accra for giving me opportunity to present today's topic on this platform. In my presentation, I will try to discuss the SME status of Bangladesh, including SME's definition. Okay. SME's definition, GDP contribution of our SME's contribution to our GDPs, rate, the role of SDG plan and LDC graduation, and loan and refinance status of SMEs, SME status in our capital market, and SME rating regulatory requirement of our country, and SME rating methodology we follow for SME credit rating. So let's start our presentation. Everybody see my presentation?
Yes, we can see it.
Okay, thank you, sir. First, I start with our country at a glance. Bangladesh is one of the most densely populated countries in the world, with total population of 165 million in area of 1,48,460 square kilometer and about 3,000 people living per square mile. Despite the population pressure, the country has been growing its economy rapidly in recent past decade, and it's expected to grow its GDP by 6.4% in 2022. The country's GDP growth rate in 2021 is 6.8%. And last one decade, the average GDP growth rate is above 6.5% of Bangladesh. After 50 years of independence from Pakistan, Bangladesh is creating window of opportunity for potential demographic dividend over the next 3 to 4 decades, because currently about 45% of our population aged below 24 years and 70% is aged below 40 years. At present, SMEs are the backbone of our economy. SME sector has the potential to provide huge employment opportunity with much lower investment, which is essential and a requirement for a highly populated country like Bangladesh. The Bangladesh economy is graduating from agroeconomy to industrial mixed economy in last 1 decade, 1 to 2 decades. The industrial sector is led by SME export, while remittance are also playing significant role in our development. So the R&D sector is supported huge by number of linked SMEs. SMEs means small medium enterprise. In addition, the significant number of SMEs has been grown during last 20 years to support development in various sectors in our country. Then let's try to define what is the definition of SMEs. The definition of SMEs vary to country. In our country, in Bangladesh, in the line of National Industrial Policy 2016, Bangladesh Bank, the central bank of our country, defined cottage, micro, small, and medium enterprise, which are not public limited companies and complies the following two criteria. The Bangladesh Bank defined SMEs in two criteria. One criteria is fixed asset size, and another criteria is number of employee. So the given table shows that the cottage industries to medium industries, the fixed asset size is below than 1 million taka to 500 million taka fixed asset size, and number of employee not more than 15 to maximum 300 are fell into SME categories and industry parts. And in trading sector, the fixed asset size below than 1 million taka to 20 million taka, and employee number is maximum 15 to 50. And Bangladesh Bank also set the limit to how much the bank finance them. For cottage industries, it is 1.5 million. In SME industries, it is 1.5 billion, BDT 1.5 billion to highest BDT, maximum BDT 750 million. And for trading sector, it is BDT 5 billion to BDT 50 million. Then come to the SME contribution to our GDP. As per IMF, total GDP of Bangladesh is USD 380.86 billion in 2021, and our GDP and SME sector's GDP contribution are given in below table. There is we see that in total GDP, our SME, small and medium enterprise companies. Is 25% of our contribute 25% of our total GDP. In US dollar, it is 95.2 billion US dollar in 2021. SME contribute 25% of our GDP, but it is there is a huge potential to contribute more. According to our country's SME policies 2019, the government SME policies goal is to increase SME sector contribution to GDP 25% to 32% within June 2024. So there is an opportunity of our SME sector to contribute more, and the government also emphasized on this issue. Now, if we look this slide, we see that the Bangladesh GDP contribution is 25% SMEs contribution. In India, it is 29% SME contribute to their GDP. In Vietnam, it is 40%. In Sri Lanka, it is 52%. In Cambodia, it's 58%. And in Indonesia, it is 59% SME sector contribute to their GDP. Then going to the next slide, here I try to discuss about the SDG goal and SDG graduation, LDC graduation by 2024, and SME sector's contribution in this area. The SME sector play a major role to achieve the 17 Sustainable Development Goal by 2030 and LDC graduation by 2024 of Bangladesh. Because the main goal of this, the major goal of SDG and LDC graduation is the women empowerment, poverty alleviation, and new job creation. And SME sectors in our country plays the major role in this area. The recent National Economic Census shows that the more than 8.1 million SME exist in our country and contributes 8.7 million employment. Among 1.8 million SMEs, 5.8 million SMEs located in rural area. So in SME sectors plays a very vital role in fund mobilization and money circulation in our rural areas. 31.2 million people directly and provide livelihood from SME sectors. 70 to 80% non-agricultural job creation from these SME sectors. 56% of SMEs are service-based. SME accounts for 40% of manufacturing output, and its positively impact on country's poverty alleviation and women empowerment. And then this slide shows the major sectors, SME sectors in Bangladesh. As per Bangladesh Bank, there are about 200 sectors segregated in SMEs. But in this slide, I will show only 36 major sectors. It includes agro-based industry, bakery, fishing, hatchery, forestry, furniture, cold storage, hospital, clinic, hotel, restaurant, printing, packaging, light engineering, handicrafts, jute goods and jute mix, rice mill, wholesale and retail shop, drug house, fertilizer business, jute trading, clothing and show business, rod and cement trading, grocery item trading, oil and pulse mills, food processing, brick field, paddy and rice mill, fish cultivation, hardware business, trading, etc. And we are rated most of these sectors client. Now we come to the SME finance status in our country. The first slide, this slide will show that the SME lending by banks and NBFIs, non-bank financial institution, and their loan disbursement status show in this the given table. Since 2011 and 12, the total volume of loan disbursement to SMEs by bank and NBFIs has enhanced about 3 times within last 10 years, from BDT 598.1 billion, equivalent to USD 7 billion, to BDT 2091.9 billion, equivalent to 24.61 billion in 2021. The given table shows that except 2019-20 financial year, that's the pandemic year, each and every year loan disbursement by our banks and NBFIs increase. And last 10 years, it is just triple. The next slide shows the Bangladesh Bank refinance scheme. Presently, Bangladesh Bank running 5 refinance schemes from its own fund and 3 projects with assistance from JICA, AIIB, and European development partners to the SME sectors, and all these refinance schemes are revolving in nature. In addition, 3 other refinance schemes have been successfully completed. The given table shows that the total amount refinanced by Bangladesh, the amount is 125.85 billion taka, and number of beneficiaries is 1,47,073. To increase the credit flow in SME sectors, the Bangladesh Bank, the central bank, take a few initiatives recently. The major 2 initiatives are given in this slide. The bank and NBFIs have been instructed to set their SME target to at least 25% of their total loan disbursement, while maintaining minimum 1% increment each year. At present, we see that there is around just now 15%. So Bangladesh Bank deep target, it should be 25% SME finance by 2024. and each and every year it will be minimum 1% increase. And to ensure the sector's contribution, the overall SME sector credit portfolio, Bangladesh Bank instructed all banks and BFIs to distribute their portfolio at least 40% in SME manufacturing sector, 25% in SME service sector, and maximum 35% for the SME trading sector. Now come to the point, the SME lending by our MFIs, microfinance institutions. MFIs played a pivotal role in broadening and deepening financial access for the poor people of our country, especially women entrepreneurs operating informal micro enterprises. In 2020-21, total 746 licensed microfinance institutions have disbursed 1,680.98 billion, equivalent to USD 20 billion, to their more than 33.3 million borrowers. In 2019-20, such amount was 1,352 billion, equivalent to 16 billion. And around 93% borrowers are women-led SMEs. The given table shows the major MFIs in our country, like Grameen Bank, BRAC, Asha, Proshika, TMSS, and Bureau Bangladesh. These 6 large MFI disbursed in 2021 1,038.18 billion taka among 1,680 billion taka. So they are the major stakeholder, the major portion loan disburser in our country. Then let's talk about the SME entrepreneur. What the obstacles faced by SME entrepreneur in our country. The SME entrepreneur face a multitude of challenges, including access to finance, lack of skilled manpower, poor training support, poor infrastructure, bureaucratic procedures, high interest rate, and huge competition. The access to finance, this means the banks actually want to finance less risky portfolio. So, but the SME sector is relatively high risky. The banks are less willing to finance the SME sectors. So many SME entrepreneurs struggle for working capital and other for going forward. The lack of skilled manpower, there's a definitely lack of skilled manpower. The skilled manpower obviously like to work corporate bodies, not like to work SMEs companies. So there's a definitely gap of skilled manpower in this sector. Then poor training support. There is no training available for our SME entrepreneur to develop their skill on specific industries. And how they reduce the risks. There's no training support at all. There is also poor infrastructure in many rural areas. There's a lack of power, electricity, and roads and infrastructure to develop. And there is also bureaucratic procedure in case of taking loan. The loan application is written in English, but many of our entrepreneurs are illiterate and very low knowledge on English, so they feel problem to fill up the applications and others. There is the interest rate also high. At present, the interest rate is 9 to 12% per annum for SME loan. And there are also huge competition in SME sector because same kinds of shop, same kinds of industry located in same rural area, 15 to 20 rice mill in same area, or 30 to 50 grocery shop in same area. So there is a huge competition. Then come to the obstacles faced by SME financiers, that is, the banks and NBFIs faces the following challenges when they provide loan to our SME entrepreneur. The one is non-availability of required documents, the absence of good transaction record with banks, the problem linked with business address, because when the bank official visit the business premises of our SME, but they found the address is different. What they put in application form and what actually they see. There's also lack of financial capacity of our entrepreneur and the business, lack of security and guarantee they provide for loan, and the minimum experience of the business, lack of managerial capacity of our entrepreneur, inadequate network, and unstructured business and financial information. These types of obstacles also faced by when we doing rating of our SME clients. And I will discuss this further in forward slide. Now, how we overcome these obstacles? One, the increased refinance scheme. If central bank increase their refinance scheme, then the overall interest rate will be reduced, and bank also will increase their loan disbursement in this sector. Increase coverage of credit guarantee scheme by Bangladesh Bank to support SME who fail to meet collateral requirements. Harmonization of policy and procedures relating SMEs. Increase regular monitoring by central bank so that banks and NBFIs increase SME loans. Regular arrange training to entrepreneurs so that they have increased entrepreneurial managerial skill, increased risk-taking capacity. Regular arrange training to bank officials so that they can support unbanked entrepreneur to have access to finance, and ensure proper and accurate region-wise database of SME and their entrepreneur. We think if the government and the loan provider takes this initiative, the access of finance to SME sector will increase, and the government plan is that 32% GDP contribution also achieved within 2024. Then come to the next slide. Here I try to present the SME platform in our country's capital market. There are rules in August 4, 2016. Bangladesh Security and Exchange Commission issued rules for defining and establishing a small cap equity market. In December 2018, the Security and Exchange Commission approved the qualified investor offer by small cap companies rules 2016, which allow small capital business to issue initial public offering in the stock market. Subsequently, from 1st May 2019, the Dhaka Stock Exchange launched its small cap platform known DSC SME platform. Then who are eligible for applying qualified investor offer? The eligibility, the Security Commission set the given criteria. The company has minimum existing paid up capital of Taka 50 million, and the company intend to raise paid up capital at least 50 million through QIO. After QIO, company's paid up capital stand below 300 million Taka. Company has complied with Securities Commission must comply with Securities Commission provision for corporate governance and guideline, and the issuer and any other director not to be bank defaulter, and there must be net profit after positive net profit after tax for at least 2 years. These are the major criteria for applying qualified investor offer. And then what's the benefit of listing? The benefit of listing, it's a small capital platform plays the vital role in funding environment by bridging funding gap for the growing SME companies, provide access to capital for growth and further development at the time of admission and through further capital offering, discriminating public profile and of the company, which increase press coverage and enhance company status with customer and suppliers. That the present status of small capital platform in our country, there are two stock exchange. One is Dhaka Stock Exchange, and second is Chittagong Stock Exchange. From 10 June 2021, the Chittagong Stock Exchange rang the bell for trading its first SME company, and from 30th September 2021, Dhaka Stock Exchange start their SME platform with 6 SME small cap companies. At present, as of 1st June 2020, total 12 companies are listed in DSC SME platform. So this is very initial stage of SME sector in our capital market. Only 12 companies are listed at present. Now, come to this slide. Here I try to discuss about the COVID-19 effect in our SME sectors and SME stimulus package status. A recent survey in SME sector shows that the COVID-19 pandemic adversely affect in our SME sectors. That is 94% of SMEs experienced lower sales due to COVID-19 pandemics. Some 21% of surveyed SMEs were closed due to pandemic fallout. 37% staff lost their job, and 70% were at risk losing their job, and 83% small business incurred losses, and 33% could not pay their loan installment. So that's depict how adversely affect these COVID-19 in our SME sectors. How the government and Bangladesh Bank take initiative to reduce the adverse effect. So the government has revamped up to effort stimulus package to prevent the possible disruption of production and employment in our SME sectors, protecting the labor market under the scope of ongoing fight against recent coronavirus outbreak. The government of Bangladesh has allocated total 930 billion, equivalent to USD 11 billion, as a stimulus package to revamp the economy. Among 930 billion, 20% allocated for SMEs sectors. SME received the total 200 billion, or equivalent to 2.535 billion, from commercial banks and NBFIs, loan against 9% designated rate, from which government will pay the 5% and as a subsidy, and the bank will to the bank, and the borrower will pay 4% to the bank and NBFIs. The SME sectors also will entitled to a refinance scheme started by Bangladesh Bank, and the amount is BDT 100 billion, equivalent to USD 1.2 billion, and which is the refinance scheme and working capital purpose for SME industries and service sector for next 3 years. This slide, I will try to present the total SME SME package in billion. We see that in Bangladesh it is 2.35 billion stimulus package. In India it is 13 billion SME stimulus package. In Thailand it is 15.4 billion US dollar, and in Malaysia it is 2.31 billion US dollar SME stimulus package their government disclosed. And the percentage is total stimulus package in India is 37%. In Bangladesh, I previously mentioned, is 20%. In Thailand, it is 33% of total stimulus package. And in Malaysia, it is 24% of its total stimulus package. And now the present status of our stimulus package. It shows that the countrywide around 74% of total fund, that is the government of Bangladesh fund is 20 billion, was distributed up to June 2021. 74% of 200 billion fund is distributed. But the stimulus package seems they are biased toward existing SME clients of the bank to avail this scheme. And majority of small enterprise have not been catered to this current package. And the ratio shows that 92% existing client avail these stimulus package facilities from the bank, and only 8% new borrowers avail this facility. So the stimulus package is not properly stimulate our SME sectors. There's almost 8 million SMEs in our country, and this 200 billion is not good enough to protect and to survive for the adverse effect of coronavirus. And up to June 2001, the Bangladesh Bank's 100 billion refinance scheme on BDP 34.26 billion refinanced by bank and NBFI, and total number of client is 97,840 only. So the status is not up to the mark. Now come to the for our SME rating status and regulatory requirement. The SME rating start from 2014 in our country, and this is a very bold step by taken by our central bank to bring the SME rating. Then SME rating has been introduced in our economy under the capital adequacy guidelines. In 1st January 2014, Bangladesh Bank launched SME rating for banks and in Bangladesh. In this regard, Bangladesh Bank developed credit credit rating methodology for small and medium enterprise. As per Bangladesh Bank circular, risk-weighted assets against credit risks and small and medium enterprise exposure to be computed on the basis of credit rating assets by credit agencies. However, the regulator still not treated SME rating as a mandatory. In our country, there are 8 rating agencies, and their names are given below. The credit rating information service, CRISIL, CRAB, NCRL, ECRL, and ACRSL, ACRL, WASO Credit Rating Agency, and BDRAL. There are total 8 rating agencies in our country. And the claim in SME, small medium enterprise, what is shown, the definition provide, they are felt into SMEs. As per definition provide, the SME fell in this category, and exposure limit is the loan limit is below than 3 million. The risk weight is 75%, and above 3 million, their loan exposure is 100%. And here is the the risk weighted of the balance sheet exposure. The SME one, the risk weight is 20%. SME two is 40%. SME three is 60%. SME 4 is 80%. SME 5 is 120%. And the unrated previously mentioned is below than 3 million or USD 35,000 US dollar is 75% risk weight, and unrated is 100% if the unrated above 3 million. And here's the ECRA mapping, the shows mapping Bangladesh brand scale. Now come to the SME rating methodology and the SME rating process. This process is almost same for all rating agencies. That is, we signed a MOU with the clients, and then this enterprise and the analyst and the work is assigned to our analyst team. The analyst team then talk with the enterprise owner regarding the documents, and they visit their premises, taking necessary documents, financial statement, and other business-related documents from them, and come to office and prepare their report. Given input in their software and Excel sheet, and present their draft report to IRC, Internal Rating Committee, for a proposed rating. And after IRC, they present the report to Rating Committee for the final rating. After rating, given the rating, our analysts disclose these to rating agents, disclose to the SME clients. If they accept, we finalize the report, and if they not accept, they review, they ask for review, and they review the report, and then after review, we finalize the report. Then come to the SME's rating parameter. As per Bangladesh Bank SME rating methodology, CRISIL follows the foreign rating parameters for doing SME rating. The parameters are industrial risk. We follow business risk, management risk, financial risk, bank relationship risk, financial security risk, and other factors when doing the SME rating. And now come to the slightly brief. In industrial risk or business risk, we follow the age of the business, business growth, business outlook, dependency of suppliers, entry and exit barrier of this rated business, government policies toward these industries, infrastructure facility the company avail, level of technology the company use, the market competition they face, the marketing strategy of rated company, the nature of product and their potentiality, and the size of business. In management risk, we look after the background and track record of the sponsor, educational qualification, income tax and VAT payment history. VAT means value-added tax, payment history, personal policies, risk-taking capacity of the sponsor, and succession plan, which is very important for SME sector. And financial risk analysis, we look after the business performance of the company, the solvency and coverage ratios, and liquidity and fund flow status of the rated enterprise. In bank relationship risk, we look after the current loan status, the compliance with loan covenant, relationship with the bank, the age of relationship. Then financial security risks, we look after the collateral coverage, legal intervention regarding security coverage, support, guarantees, and other factors. There are other factors we also look after: the enterprise disaster management capacity, funding flexibility, government subsidy and tax waiver, and insurance. Analyzing those parameters, we provide the rating of the SME clients. Then, what problem we face when doing this rating at the time of rating? The structure of SMEs actually does not support the rating process. The process, the structure, most of the SMEs are unstructured in our country. They have no proper documentation. So when in the rating process, we call our clients and this says that they have no document and there's no ledger. So we face huge problem when collecting information data from such kind of unstructured SME sector. The client do not understand why they require the rating. Most of the client says why they require it because they are not directly benefited from the rating. The rating benefits the banks, their capital adequacy purpose. The bank use the rating. So this also problem for us to manage the client to understand why the rating requires. Most of the information provided by the banker, and so it's a big problem because the entrepreneur are unskilled, many are illiterate, they are not capable to provide any sort of data. Even they are not like to talk with us when we are asking many questions regarding various risk parameters. The language of rating and the clients are not same. The reports we prepare is in English. The clients, many clients are illiterate and very poor in English. And there are ununiqueness of large number of sector to apply methodology. There are 200 sector in SMEs. So the methodology to apply this 200 sector is quite impossible or quite tough. And the sector-wise rating inconsistency. This is also a problem. Like the rice industry sector rating and the grocery sector rating, SME 1 of SME rating 1, SME 1, the best rating of rice industry, rice mill industry, and SME 1 of the grocery trading is not same because the risk is not same. The rice milling industries face various kind of risk, and grocery industry face other risks. So there is a rating inconsistencies. The SME 1 in rice mill and SME 1 in a grocery shop is not same. So there is a rating inconsistency we face. And there is a pre-sale rating status, last 5 year status, and here I show. In 2021, we are doing rating 7,324 SME rating, and the corporate rating is 1,549. And last 5 years, the total SME rating is 29,437. And corporate rating is 7,721. So, measure is almost 85% of our rating is SMEs. That's the end of my presentation. Hope you enjoy my presentation. Thank you.
Mr. Shanti, I think you are on mute.
Sorry, I was on mute. Yes,
Yeah,
thank you,
yeah.
Razib. You will, that was a comprehensive one, and we'll have a question and answer session right now. and you just raise your hand or go to the chat box, address your question directly to Rajiv, and we'll have more question and answer opportunities after the second speaker. So, anybody has a question right now?
Hello, hello. This is
Yeah, go
Jahazib
ahead.
Ali.
Go ahead.
Yes.
We hear you.
Hello, Sandy. Can you hear me? Am I clear?
Yes, yes.
Okay, Sandy. This is Jahazib Ali on behalf of Faryal Ahmed from JCR VIS Credit Rating Company. Actually, I don't have any question, but I just wanted to include some point in that the presentation. It was really an articulate presentation. I really enjoyed that presentation. However, I saw the comparison. The comparison was in one of the slide that was showing that SME contribution to the GDP. That I found that actually I could not find Pakistan over there. So I just had some numbers that how SME contribute in the GDP of Pakistan. It's here in Pakistan. It's around $86 billion. That is 30% or 32% of our overall GDP. I just wanted to add this number in that presentation because I could not find the actually comparison of Pakistan over there.
Will you repeat
Wanting
that? Is 32%
of
of
SME contribute.
GDP is the SME
Yes.
contribution?
Yeah, SME contributes
Okay,
around
that's
30
okay.
30%.
Thank you very much.
Okay, I will add this. I will add this.
Thank you. And second point, of course, that was so articulated presentation. I also found that stimulus packages, even I could not find the number of Pakistan, that how in Pakistan these packages are being given. So I just put some presentation on that chat box. If somebody want to read that material, that what is the contribution and how stimulative packages were given by the NCOC in Pakistan is around 1.3 billion in Pakistani rupees. So there was just a little contribution from my end that I found in your presentation, because I actually I could not, this is so curious that I could not find Pakistan. So I just tried to put that number. Thank you so much.
Okay, thank you so much. I will accommodate this.
Thank you for that additional information. Another next question, please. I do have a question, but I'd like to reserve it for after the second speaker. So if let's go, therefore, let's ask our second speaker, Mr. Patel, to make his presentation, and we can have what you might call a question and answer session that will be addressed and answered by our resource speakers ourselves. So, Mr. Patel, Kalpes, will you make your presentation now, please?
Yeah, sure, Mr. Shanti. Yeah. Hope everyone is able to see my presentation.
We can see it very well, thank you.
Yeah. So it's visible on a full screen? Oh no.
Okay.
Yes, it's visible.
Okay, great. Thank you. Yeah. So
Full screen is not there.
not there, no?
You make it full screen.
Yeah. Wait. Yeah. Now I think it's okay.
Okay,
Right.
that's enlarged now. Thank you.
Yeah. So thank you, Mr. Shanti and Akra, for giving this opportunity to share our views on SME rating methodologies and updates. Good afternoon, everyone.
Good afternoon.
Before we begin the detailed discussion, I would like to quickly go through the points that we will touch upon in today's presentation. So as my colleague, Mr. Rajiv, has already discussed about SMEs, in particular with respect to Bangladesh. So here the context would be the SMEs in India. So we will cover Indian SME sector its contribution to Indian economy, and followed by the rating methodologies followed for the SMEs, rating products available to SMEs, and regulatory and recent updates in the SME rating space particularly. Apart from that, we will also touch upon the SME portfolio performance and the MCR and default trends in Indian SME sector. So SMEs in India has significant importance in the overall economy because of its sheer size and shape. So the SME contributes around 29% of GDP in India. Apart from that, its significance lies with respect to employment provided to 111 million people and its export dominance of about 40% with manufacturing output of 45%. So SME, I would say, has really a great importance in Indian economy because it provides economic growth, promoting equitable development and distribution of income and wealth within the country, highest employment generation capability, and it also reduces the regional imbalances. As Mr. Rajiv has mentioned about the rural economy in Bangladesh, similar to that, even in India, we find that the industrialization in the remote area or backward areas are being handled or maybe supported by SME development. In case of SMEs, of late, that is recently, Indian government has changed the definition of SMEs, which was there since 2006. Now the revised definition talks about say investment in plant and machinery apart from income of the micro, small and medium enterprises. So where the definition which was set in 2006 having a limit of investment only to define the entity or a unit as SME, now that definition also includes the total income apart from the investment, and that investment has also been increased substantially from, say, for micro and small from 25 lakh and 5 crore to now it is 1 crore and 10 crore, and for medium enterprises it has been increased to around 50 crore rupees. So by doing this, what government was intending to do, that the definition which was set aside in 2006 was quite old definition as far as investment in plant and machinery is concerned. So because of this inflationary scenario plus advancement in the technology, the SMEs were unable to invest funds in their upgradation or modernization of their plant and machinery, because if they do so, their status of SME would no longer be continuing, and resultantly they will not be able to have benefits available to SMEs by way of, say, interest rate subvention or maybe subsidy or promotions, promotional schemes of the government, apart from, say, sourcing preferences given to Indian SMEs by various public sector undertakings. So that definition has been changed in July 2020. As mentioned in the previous presentation also, these are the some of the points where the SMEs finds real very say very much trouble in terms of getting the finance from the lenders, adequate finance, I would say. So from the lenders perspective, they always say about the high risk of availability of reliable data or financial information from the SMEs because of the unstructured or unorganized nature of the large part of units, and the access to institutionalized financial intermediaries, that is professional available to furnish the data for to lenders from on behalf of SMEs, and SMEs may not have concise and precise requirement about their requirement about the funding as well as the products knowledge, and their size of requirement is smaller, and the procedural cost for the lender is quite high. On the other hand, borrowers also face challenges in terms of high cost of borrowing. Across industry, across economy, we find that the SMEs are largely finding it difficult to have access to finance at a relatively competitive rate, or maybe the cheaper rate. So that resulting into high cost of borrowing, lower profitability, and in the end, they do not have adequate funds for their growth aspirations. Other than that, maybe lenders are hesitant to lend to SMEs in some of the uncharted territories, or maybe SMEs new to the bank, and the cumbersome process of availing finances, lot of paperwork, and foremost is like collateral based lending, because most of the lenders prefer good coverage of collateral. However, if we see that the SMEs who are largely dominantly promoted by the individual and proprietorship entrepreneurs, so they are looking for funds for their growth aspirations. However, and on the other hand, they would have committed their resources towards the development and growth of their businesses. So they may not have adequate collateral base available to support their borrowing requirements. That this is nothing but impediments towards the SMEs say funding requirements and growth plans. In case of credit rating products for SMEs, as today our topic is about methodology and the updates on the ratings of SMEs, I would like to bring to the knowledge of forum that in India there are largely, I would say, two products available for SMEs, specifically with respect to credit risk assessment, or maybe with respect to their borrowing requirements from the lenders. So one prominent product is a bank loan rating, and second one is a SME rating or a grading. So as everyone is aware that bank loan rating is nothing but the requirement under the Basel guidelines under standardized approach, where the entity has to have bank loan rating, and this bank loan rating is being used by the commercial banks for their capital adequacy requirement. And in India, the scale of under Basel II guidelines is standardized across the rating agencies, that is AAA to D, where AAA is highest rating and D is the lowest rating. And the methodology followed across rating agencies is largely standardized. That includes, say, industry analysis, then business and financials, and then management risk analysis, apart from project risk, if any. Whereas in case of SME ratings, the scale is dedicatedly or maybe niche scale applied to the units falling under the SME category, and the scale is 1 to 8. So the major advantage over here to the SMEs having maybe availing the SME rating rather than the bank loan rating is that in case of bank loan rating, their assessment would happen across say industry spectrum, and from large corporate to a proprietorship, the scale would remain the same. Whereas in case of this universe, SME universe, the scale and the nature of activities are alike and similar to the SMEs, and hence probability of having better ratings of SME in this scale would be higher compared to the bank loan ratings. And this methodology has also again evolved from the standard methods for bank loan rating or instrument ratings. Apart from that, this product is of late in India is being used by some of the public sector banks, as they have started accepting SME rating as their compliance requirement as against bank loan rating for smaller exposures. Yeah. So as I have mentioned about the methodology, this is a flowchart of rating methodology, external and internal risk, which includes industry, business, financials, and management. We'll discuss this in detail in next section. So when we talk about, say, SME rating, here this is particularly highlighted towards the SME ratings and not the bank loan ratings, because the SMEs largely have SME ratings than the bank loan rating in current scenario, because large part of SMEs have opted for SME ratings, and hence it is focusing on the SME rating. So promoters' qualification and experience, succession planning, as Mr. Rajiv has also mentioned about the family centric or maybe individual operating the entities, the succession planning is significant, has so much of significance in the rating of SMEs. Apart from that, resourcefulness of the promoter, because the bank finance and most of the scenario remains inadequate compared to the requirements. So if promoters are resourcefulness, have better resources to support the operations or a growth of their entity, they may have better chances of getting a better rating. And the labor relationship and internal control system. That is, internal control system is nothing but the MIS and checks and balances within the business operations by the management. And then in case of business risk, the product profile and revenue mix and track record of operations, nothing but the age of the business, customer supplier profile and trade terms, because that, as we must have seen, that SMEs are largely having limited presence in the value chain. So their customer and supplier profile remains very important, because if their bargaining power is significantly low in those circumstances, in the economic downturn, they may not be able to face or withstand the risk of risk of survival. And then environmental compliance and ownership of facilities. At times, what we have seen as a rating agency, that some of the units or maybe entrepreneurs have the units on a lease basis or a rental basis. So that compromises to a certain extent the principle of a going concern basis. Say financial risk, financial flexibility, including the liquidity. Here, as compared to the bank loan rating, the emphasis on the projections or future plans remains lower compared to the SME ratings and bank loan ratings. And the past performance has significant weightage. Quality of accounts meaning thereby any sort of irregularities in the date, or maybe statutory repayments, or maybe auditors' qualification in the annual reports, that we look at very seriously. And due diligence with lenders and auditor, apart from maybe customers and banker feedback, also customer and supplier feedback also we may seek at times. And the industry risk, overall industry, say demand supply scenario and availability of substitute, that plays a vital role, because in those circumstances, the product pricing or maybe the ability to garner better margins, better realizations would remain very limited, and hence those entities may not have better financial performance, and hence rating remains on a lower side. And cyclicality or seasonality of the business, which affects the cash flows of the SME, and hence subsequent repayment capabilities of the SME. So that has to be seen very critically. Further, government also provides quite a large number of incentives to the SME by way of subsidy or maybe promotional schemes or maybe exports incentives and interest subvention, etc. So whether those benefits are available to a particular unit or a issuer, and how much realization or how much that benefit is accruing to the particular SME plays a significant role. And apart from that, maybe a project risk. If any large size project SME is undertaking, then the pre and post implementation risk, apart from the financial closure and the status of the project implementation. Here I have highlighted basic differences between bank loan rating and the SME rating. So in case of us, bank loan rating, the service provider is accredited credit rating agencies in India, and that accreditation is from RBI as well as SEBI, so Reserve Bank of India, that is Central Bank of India, and Security and Exchange Board of India. Whereas the SME ratings are now largely being handled by the subsidiaries or associate concerns of the credit rating agencies in India. Regulatory requirement, yes, as per Basel II norms. Here in case of SME, no. And threshold is 5 crore normally. But nowadays, some of the lenders have increased the threshold from 5 crore to 25 and 50 crore rupees INR. And universities, all operating entities in India with above threshold limits. And methodology we have already discussed. So information sources are also like similar to bank loan rating, but a large part of information is being provided by the client in case of SME rating. Whereas in case of bank loan rating, we also take secondary sources of information, including regulatory filings and statements and third-party checks. In case of SME and bank loan ratings, we do follow rating models for bank loan rating. In most of the industry, we have model-based indicative ratings apart from finalization of rating by the rating committee. Whereas in SME ratings, we do have models in place. However, there is no statutory requirement. Monitoring of bank loan rating is continuous, ongoing. In 24/7, 365 days, we monitor ratings of under Basel II guidelines. However, SME ratings are one-time exercise and may not require to review at a frequent interval. And rating dissemination, as per regulatory guidelines, we need to disseminate those ratings on our website within a defined timeline, that is 2 days and 7 days, respectively, for initial and surveillance and review ratings. Whereas in SME ratings, there is no regulatory requirement. And the scale is also quite different. Here, the standardized scale is AAA to D, whereas in SME, it is 1 to 8. The recent updates, as per our today's theme, like in India, what we have observed in last 3-4 years, that particularly SME segment has seen significant change in the rating methodology or rating acceptance or rating requirements, rather, I would say. So in 2018, large public sector banks have raised their threshold limit required for bank loan ratings. And that limit earlier used to be 5 to 10 crore rupees, is now 25 and 50 crore rupees. So, and some of these banks have also promoted the SME rating as against the bank loan rating for a smaller exposure, that is in the range of 25 and 50 crore rupees. And major SME financing refinancing institute has also raised its requirement of bank loan rating from 5 crore to 25 crore. And they are very well accepting the SME ratings as against bank loan rating for their compliance and regulatory requirement. And other banks are still continuing with 5 and 10 crore rupees of threshold limit for bank loan rating requirement. So because of this change in the threshold limit by majority of banks, I would say 5-7 large banks have changed this requirement from 2018 and 19. So that has resulted into significant increase in the portfolio of issuer non-cooperating. I would like to highlight here that issuer non-cooperating is like the change the regulator has made in 2017, wherein earlier we used to say exit from the accounts, or maybe the rating can be discontinued by way of withdrawal or maybe suspension of the ratings. However, from 2017 onward, the regulator has asked rating agencies not to suspend the ratings. Either they can withdraw the ratings, or maybe if issuer is not cooperating or not paying fees, that is commercial clearance is also pending, they can put those issuers rating under issuer non-cooperating category. And they need to review those rating at a regulatory interval, that is 12 to 15 months timeline. Further, credit rating agencies have been asked by SEBI, that is regulator again, in 2018, that their non-rating services should be discontinued or maybe hived off from their existing operations of the ratings to a separate entities, and they should focus largely on the regulated product, that is bank loan rating, instrument ratings, etc. And accordingly, most of the CRA or all the CRAs have transferred their SME rating grading business to their subsidiaries or maybe a group or associate concerns from 2019 or 20, because there was a timeline given for the CRS to dealing this business within a 2 years time from the circular. So this has actually resulted into, this is a portfolio analysis of SMEs rated under BLR scale. As I have mentioned earlier in my earlier slides about the recent changes in the say environment of SME ratings with respect to the lender's stance as well as the regulator's stance. So that has led to significant erosion in the SME rated portfolio from say peak level portfolio, live rating portfolio of 23,500 to now the live rating portfolio has shrunk to around 8,500 clients. And balanced clients have been migrated to the category of issuer non-cooperating, and some of the clients have gone for a withdrawal of the ratings. But the regulatory changes and lender level changes have resulted into significant migration from active clients to passive clients, that is issuer non-cooperating clients, in last 4-5 years. So at SME pool, which was used to be say 24,000, is now 8,000, whereas the issuer non-cooperating clients, we started with around 400-500 clients in FY17, has now reached to a level of 22,000-24,000 clients. This is across credit rating agencies in India, 7 rating agencies in India. So apart from that, this chart demonstrates the default analysis of SME BLR universe. So here, when I say SME BLR universe, that means the SMEs which are rated on a scale of AAA to D in a normal standardized approach of Basel guidelines. So that SMEs which were rated at 13,000 live ratings to close to, as mentioned, around 8,000 odd clients at the beginning of FY23, and at the beginning of FY22 it was 11,000 clients. The overall default rate has ranged between 3.5% to 1.5%. So this significant dip in default rate in FY21 was primarily, despite the COVID-like situation, was primarily because of the significant relaxation given by the central bank in India, that is for moratorium of around 6 months from March 20 to August 20 for repayment of interest as well as loan liabilities to all the corporates, whoever wants to opt for that scheme. So that moratorium has given significant reliefs to the borrowers in terms of their requirement of repayment of date, and that has resulted in augmentation of some amount of cash flow for their internal requirement, as well as they were able to sustain the significantly bad phase of Corona in 2020 calendar year. Now that has reached up to around 2.5% in FY22, and further we expect as a credit rating agency that this default rate should go in the territory of around 3% or so, because of twin effects of interest rate increase as well as the inflation and the resultant increase in the commodity prices, which is definitely would end up in suboptimal performance of the large part of corporate portfolio, including SMEs, because interest rate in in this current quarter itself, the central bank has increased the interest rate by around 90 basis points in 2 tranches. And going forward, we, as our house view contains that maybe interest rate is further go up by around 50 to 100 basis points from here onward. This is portfolio analysis again, the modified credit ratio of SMEs for last 9-10 years and the credit ratio. Here, the modified credit ratio is from 1 to 1.2 times, and the credit ratio has substantially improved in fag end of these Corona years, for 21 and 22. 22, we have seen significant jump in the credit ratio because there were large amount of upgrades compared to the downgrades, and that is primarily because of significant earlier because of Corona there were relaxation in terms of credit and interest subvention, plus lower interest rate credit available to corporates. That has resulted into somewhat benefit to the corporates by way of saving in the interest cost. Apart from that, the corporates or maybe SMEs have also rationalized their cost of production. Various cost measures have been taken by the corporates, resulting into better profitability. Apart from the pent-up demand, had led to good amount of realizations on their product and service portfolio. So net, there was good traction in the upgrade vis-a-vis the downgrades in FY21 and more better in FY22. And the upgrades vis-a-vis the downgrades, if I talk about say for last 3-4 years, in case of upgrades, we have seen major upgrades in case of say construction, pharma, chemicals, ceramic, steel and iron and steel, and consumer foods. Whereas major downgrades in last 2-3 years have happened in the area of hospitality, that is hotel and tourism portfolio, auto ancillary, education institute and real estate and industrial engineering, apart from other say ancillary activities in the SME portfolio. So way forward, going forward, what we feel that SME ratings, of course, will have a better, outlook going forward. And as we have mentioned, I mean, my colleague has also mentioned about the information asymmetry and the obstacles faced by the SMEs as well as the lenders because of the unavailability of information or the sanctity of data. Here in India, we can say that because of the transformation, including say demonetization and then subsequently implementation of GST in 2017 and high pace of growth in digital payments, apart from compulsion on the e-way bills for movement of goods in the GST structure, has resulted into significant amount of digitization of data of the businesses, and which is expected to yield better results in terms of the credit risk assessment or maybe to the lenders as well as the rating agencies going forward, because the data is harmonized and authenticated data from the say databases of the government or the regulatory authority, which would be available to the corporates, to the lenders as well as the credit rating agencies and the other regulators by way of the mechanism which was unavailed by government in 2021 about the account aggregator. So by meaning thereby the account aggregators are the entities which would be having data in their portfolio, and they can securely transfer this data digitally from one financial institution to other with the consent of the borrower, and that can be utilized for credit risk assessment and a decision making for the borrowers. So we feel that this information asymmetry or maybe authenticity of data would increase going forward, and that will also be aided by or helped by say machine learning techniques as well as artificial intelligence going forward. Thank you everyone. Thanks for hearing me patiently.
Before I forget, what is the specific reason again for disengaging the SME rating operations from the other operations of credit ratings? Because you said the government has required that you disengage, so to speak. The
Yeah, I think
SME
again you are on mute or what?
Yeah, what's the main reason? What's the main reason for requiring a disengagement or a separation, since they're both credit rating anyway?
Yeah, I'm done.
Did you get the reason? Did you get my question? Kalpesh, did you get my question?
I think we are not able to hear you, Mr. Shanti.
Okay. You did mention a little earlier that the government required credit rating agencies to disengage or separate the SME ratings from the main operations. Did I get you correctly or wrongly? No, you can hear me anyway. Hello? I think that we have some technical problem here. Kalpes, can you hear me? Can anybody hear me?
Yes, yes, Mr. Sandy, we can hear you.
Okay, I was
I hear
asking
you.
why. I don't know, can Kalpes hear me? Kalpes, can you hear me?
Yeah.
Okay. My question really was, I thought I heard you that the government is requiring credit rating agencies to separate the SME rating operations from the main operations. What is the main reason?
This was directed by the regulator, that is Security Exchange Board of India, in 2018, to the credit rating agencies should not have any other product than the rating operations, meaning thereby they have to continue with the rating operations of either bank loan rating and the instrument ratings, and the ratings alongside, like recovery rating or a issuer rating of those type of products. Whereas the other products, including research or SME rating, NSIC, MSc rating, earlier we used to have with the help of government subsidy, are now they have been asked to transfer those businesses from main credit rating agencies to the group company or a subsidiary businesses. So they
Because
wanted to have demarcation between the regulated business and a non-regulated business.
so SME credit ratings are not regulated in India.
Absolutely. So SMEs, as in one of my slide, I have given that data of live rating of SMEs close to 25,000 in year 2014-15 was a bank loan ratings with a threshold of 5 crore and 10 crore of by various public sector banks, have subsequently raised that threshold, and the bank RBI has also SEBI has also asked rating agencies to review those rating on the INC category. Those ratings have been migrated from live rating to INC category, and the SME rating was promoted by some of the public sector banks with a lower exposure, resulted into shrinkage in that SME dominant portfolio from that level to 1/3. Now it's close to around 8,500 entities in the bank loan rating segment. So those ratings are covered by the CRAs, that is rating agencies, credit rating agencies. However, SME rating on a scale of 1 to 8 is being handled by the subsidiary or a group companies of the CRS.
Rajiv, may I call you to react to the answer of Kalpes? Rajiv.
Yes. In our country, Bangladesh Bank, the central bank of our country, and Security Exchange Commission are the regulator of Security Exchange Commission, regulator of our rating agencies, and there is no obligation. They say we can do the rating, bank loan rating, and also entity rating, both.
So here, I would like to add one more point, that when I see Mr. Rajiv's presentation, there in case of SMEs, if they are rated on a 1 to 8 scale, the capital adequacy requirement percentage was aligned with the SME 1 to 8 scale. Whereas in India, the capital adequacy requirement from the Basel Accord and RBI's requirement for public sector banks was linked or aligned to the standardized approach only, and that scale is AAA to D. In case of SME rated portfolio, that rating is non-regulated rating, and the capital adequacy requirement is not aligned to that SME ratings scale.
Okay.
Here I can add, Kalpash,
Yes, sir.
Muzaffar.
that in Bangladesh, actually the central bank has given the guideline on SME methodology plus the SME scales. They are linked to the risk rating of the central bank, and they attached it to the central bank risk rating. So therefore, it has got a direct impact on the capital adequacy, and our threshold of rating an SME is a 30 lakhs only, that is 0.3 lakhs, quite low. The other point I want to ask you about the SMERA. SMERA was basically in India was doing only the SME rating. Is it in existence now, as you're telling that in 2018, there was a circular they cannot do, and no rating agency can do other business, but they are dealing with the information of, I think, the the one of the very known information provider, that is, they are working together. So is it SMERA is doing both rating and information service?
Yeah,
at present?
yeah, Mr. Ahmed. Yeah, so in case of SMERA, that is in the existence. As I mentioned about the 7 rating agencies, it is one of them. However, again, in that case also, they have separated their businesses for regulated business, that is bank loan rating, and the non-regulated business, that is SME rating businesses separately. Yeah, so they are doing in a different entities.
Which
And I
is,
think SMERA's name is like
go ahead.
acute rating agency.
Who I addressed this to both Rajiv and Kalpesh. So SME ratings, who are the principal users of your SME ratings? Individual investors, institutional investors, or your banks or regulator, whoever? Okay, Kalpesh.
Yeah. So here in India, it has been mentioned in my presentation also, that SME rating is being used by some of the public sector banks for their compliance and risk assessment requirement. However, the regulator have not given any accord on the SME ratings per se, but banks have discretionarily revised the internal policies, or maybe they have included that as part of their internal rating policies, that SME rating is acceptable up to exposure of rupees 50 crore to the borrowers.
Rajiv?
In Bangladesh, I'm just giving you an idea. In Bangladesh, the SME ratings are mostly used by the central banks for their capital adequacy guideline. But interestingly, now very recent times, I have seen some of the banks who are dealing with SME, they are asking for the information about SMEs for further financing. So these are the things that recently I have observed from the small banks who are interested in SME financing.
Is it correct, therefore, Rajiv, my understanding is that in
Yes, sir.
Bangladesh, the SME ratings are really of interest largely to banks because they use it for risk weight purposes.
Yes, sir.
Okay.
Yeah.
Is that true? Would that be true also in India, Kalpesh? No.
Pardon? Sorry.
Would that also be true in India, that the SME ratings are used by the banks for risk weight purposes? No.
No.
Oh,
That is what I
okay.
have mentioned, that a regular requirement is for the bank loan ratings. If bank loan rating is not there for a particular borrower or a issuer, then it is treated as an unrated exposure, and accordingly the risk weight is applied.
There's somebody in our group from Pefindo, Indonesia. Who are the principal users of SME credits in Indonesia? Somebody from Pefindo, please. Is there anybody from Pefindo? I saw somebody. Could you answer the question? In Indonesia, who are the main users of SME ratings? Is it the bank or individual or institutional investors or regulators? Anybody from Indonesia?
Hello, hello, can you hear me?
Yes, yes. Could you answer that question for us?
Yes, currently there is no SME rating in Indonesia. We tried to develop
Okay.
it back in 2013 and 2014, but currently we haven't used the SME rating right now. So we feel that probably the main users of the SME rating would be banks. But as of now, we haven't seen any SME rating yet. There are vendor ratings done by the non-rating agencies, but that's all in Indonesia. Although as we've seen from the presentation, the SME contribution to the economy is quite high in Indonesia.
Yes, quite high. That's why I was asking.
Yes.
Thank you. Thank you, Ahmad. Thank you.
Thank
All
you, Mr.
right.
Sampi.
Okay, let's ask somebody else to join by asking their own questions. Anybody, any questions from the audience, please? Just
There is a question.
interrupt.
There is a question in the chat box that from Pakra that when we are rating the SMEs, how would you deal with the financial statements where it is not required? The financial statements are not required for the SMEs. That is one of the very important issues that we require to deal with, because as per IS guidelines, it is not required even in Bangladesh to prepare financial statements. In Pakistan, I have seen that if it exceeds certain threshold of revenue, they are required to submit a statement of financial statements to the central bank, covering by the certified by cost and management accountant or chartered accountant. And in Bangladesh, actually, it is not yet so required by the central bank. However, I think they are thinking if it exceeds certain threshold of revenue, maybe that they are required to submit a statement signed by themselves so that banks can deal with these things. From rating perspective, what we are doing, that we are asking them to submit their statement of financial statements, but in addition to that, we try to identify what is their income, what is their expenditure. Since these are very many, and we require to know their expenditures and income, and supported by the bank statement, all these things together, we try to assess their financial position. That's all from my side.
Okay, thank you, Muzaffar. Mr. Hassan from Pakra, I think, did you have a question? Mr. Hassan Pakra. Did you have a question?
Hello, thanks. I guess Muzaffar Saab has answered it. Thank you.
Okay.
So I would like to add here that in case of India, also like similar to what he has mentioned, like in India, what happens that in case of SME, we come across the constitutes like proprietorship, partnership, as well as the corporate entities in SME. So if it is a corporate entity, any which ways they file annual reports to the ROC, that is Register of Companies. So by accessing the annual reports, we can have financial data. In case of a partnership firm or a proprietorship firm, generally they provide good data to the income tax authority, I mean CBDT, while filing their returns, income tax returns. So by accessing the income tax return or TCD report in case of partnership firm, we have good database or the financials of those issuer for the ratings. And apart from that, as Mr. Muzaffar has mentioned about the bank statement, that is also a very critical document nowadays to access whether the issuer or a client, whatever data has been submitted to the income tax authority or maybe the other authority or whatever data they have submitted to the rating agencies are in line with what has been routed to banks in terms of sales and the purchases. If it is tallying with that, maybe we can consider those databases also as part of our analysis. Yeah.
Okay, thank you very much. Rajiv, can you go back to your presentation on that slide on obstacles? Can we go back to that? I just want to have a question on those. From the standpoint, I think, of the SME, yeah, the obstacles, somewhere there.
Okay.
What you said, most of the information provided by bankers and not by clients.
Okay.
That part.
I will show that.
Yeah, they say most of the information are provided by the bankers and not by the clients. And does this mean, Rashid, that there is really no, when you rate an SME, there is no direct conversation or interview with the client at all, just the banks?
No, here let me explain what
Yes,
happened.
Mustafa, please.
That in about 95% of these bank financing to the SMEs are for the trade finance only. That is, they are financing the stock making or the stock inventory. So here, bankers are mainly using the information that what is the position of stock is there in at the end of the period. So these things bankers are preparing along with the through physical verification with the client. That is one important that we used to collect it to meaning that to see that the whatever amount they have financed to the that particular client, it is in the business or it has erosion. All these things. So here bankers play an important part because this, as Rajiv told, that the clients as clients do not understand why these ratings are, why they require the stock. They are rather afraid of this. So bankers play a very important role here.
Okay, the bankers are a source
Our
of
problem was,
yeah, but how do you? My question really is, when in Bangladesh, when you do an SME rating, do you make it a point to talk to the clients, to the rating itself?
Yeah. Yes.
Universally.
We try to visit, and if it is in a very remotest area, in some cases, then we try to have information through telephone, through cell phone.
And I can see from here also, just looking at this enumeration of problems, that sometimes it's not really very meaningful to talk to the clients because they do not understand what is required of them. Is that correct?
Yeah, right.
Yeah. Okay. I raise these questions because SMEs, as we look at the presentation of very nice presentation of Rajiv, that they contribute so much to the GDP, and yet there is they need to be rated or in some way assessed in their credit standing so that they can be of more greater contributors, so to speak, to GDP by granting them additional or expanded credit. But they, it seems it's a universal problem, and even in the Philippines, that's I'm trying to push for SME credit rating, and I have my colleagues in Phil Ratings here who are really very attentive, I would think, right now. But Muzaffar, you are the one who's really the veteran here. Show us an opening, a wider door to getting out of this problem.
Actually, we are discussing with the regulators that whether the bankers should be eliminated from this side, because bankers here the beneficiaries for these SME ratings.
That's
So
right.
they should not be in between the client and the rating agency. That banker should be stopped because they are taking the advantage. Sometimes they are pressing that you give us a good rating because it has impact on your the capital adequacy. So we are discussing with the central bank as well as Securities and Exchange Commission. One way or other through the regulation, this should be stopped. That we are trying.
Which leads me to a question. Who pays for the SME rating? The client, the bank, or who?
In many cases, bank is paying and collecting it from the client.
Oh, so that's why they want to provide the information. So let's address this particular issue. In India, who pays for the SME rating?
Client.
The banks.
Yeah.
So the banks are the ones who pay because they want to use the rating. And they are also a source of the information. That's nothing wrong. But
No, here in India also, like bankers want the rating for SMEs, but still like client pays the fee. Issuer pay more only apply.
Is there a potential conflict of interest here that we should be aware of and put some guardrails, so to speak? And I think you mentioned your point already. So may I ask some other opinions? Chong, are you there? Chong, what do you think? Are you still there, Chong? Okay, I don't think he's there anymore. But anybody else who would like to contribute their own thinking? Rajiv, you want to say some more about our discussion? It's I don't see a very clear answer for myself yet. But obviously, we do really need to introduce some kind of better, improved credit assessment, not just structure but methodology for SMEs, so that they can have more access to greater expanded finance to contribute to the GDP. And I noticed, this is one more thing. I noticed that you mentioned, I think it was Kalpes who mentioned it, also I think Rajiv, that it is, in India, it is really the government developing simple and transparent methodology for MSME ratings.
Correct.
It's the government that's developing the methodology.
So for last 2 years, we have been hearing from, say, Ministry of MSME, Government of India, that they are in the process of developing rating methodology specifically for SMEs, so as to rate SMEs universally on a similar rating scale with a similar set of information documents. And large part of this document, as I mentioned in the presentation, would be in form of digital records available from various regulators as well as the aggregators, including GST and CBDT. GSTN means Goods and Service Tax Network, Central Board of Income Tax, and the banks who can provide as a lender the financial information or a financial statements for the processing of the ratings of SMEs, where we find challenges in terms of uniformity of document or maybe adequacy of documents and the authenticity of documents at times if it comes from the SME or an issuer. So that is where government is working on right now.
So that's really that's a good reason, because they are in a good vantage point because they have the information. But do they ever consult you, the
Correct.
private sector? Do
Correct.
they consult you formally?
Correct.
Are there
Yeah.
consultations?
Yeah.
In Bangladesh, Rajiv and Muzaffar, is it also the same that the government is developing the methodology or helping develop the methodology for SME ratings?
Initially, we from CRISIL submitted the methodology to the central bank because there was a demand from the banks to rate the SMEs. And that was ultimately with some modification and with some stringent, marks. They have already published this methodology and applicable by all the rating agencies. So we are now trying to follow that methodology given by the central bank.
I see. Okay.
And as far as regulatory,
Go ahead.
regulatory environment is concerned, like till 2018, middle of 2018, the Ministry of MSME had also one flagship scheme under which the ministry was providing subsidy for the credit rating under the scale of MSc rating scale, that was performance and capability based rating scale, where the government was providing subsidy of 75% of a rating fee. So that scheme was discontinued in 18 with the intention to come up with a revised scheme for the ratings of SMEs on a unique scale.
Okay, okay. Okay, any more questions from the audience? If none, now, Hassan, is that you? Do you have another question, or is it Falga? Do you have a question? Do you have a question, please? Go ahead.
Hello, Assalamualaikum. Can you people hear me?
Oh, yeah, okay. Go ahead, Faika.
Okay, this is me, Faika Kamar from Pakistan Credit Rating Agency. My question is like in continuation of what Hassan asked you people previously. So yes, information solicitation is a challenge in case of SME rating. My question is that like we look around other areas, other maybe you could say other countries or other credit rating agencies which work on SME side as well. So the way Mr. Patel and Mr. Muzaffar, they said like the income tax document or maybe like the bank statements, there are some very important documents that can be looked into for forming a credit opinion for any SME. What about any central channel like set up by the government or any such kind of an authority or body that could like have all the documents at one place rather than for forming an opinion and soliciting different documents from different places? So how easy you think that could be and that can be done? And do you think that would help us and streamline the difficulty that the countries who have like large SME segment that could solve the issue or the concern? Thank you.
Who would like to react to that, Kalpesh?
Yeah,
I like
see,
to.
Go ahead.
Please go
please,
ahead.
sir. Yeah. Okay. So you rightly pointed out about this point, and if you see my last slide about the way forward, I have articulated about few points on this lines only, that some of the standard documentation, like as mentioned about the GST or maybe CBDT data or bank statements and other things. So government has come up with a account aggregator concept and introduced account aggregator concept last year, and they have started providing license to these account aggregators. The account aggregators are the entities who will be in the possession of the standardized data basis with the consent of the borrower or maybe the lender. They can provide or transmit this data from one financial institute to other financial institute for the credit risk assessment. And similarly, if it can include going forward maybe rating agencies, then rating agencies will also be having that access to the standardized databases. And by doing so, maybe this problem can be addressed, the availability of information from the SMEs.
Rasim, you wanted to say something also.
Yes, if in Bangladesh there is no such organization to provide all data, but it's helpful if we get all important data from one source. It is helpful for us to accurately rate the entities.
Okay. All right. Thank you. It has been a fruitful and a full afternoon of discussions. Very interesting. Thank you very much to our resource persons, Mr. Razib Ahmed and Mr. Kalpesh Patel. And thank you for this audience. We were 100. And this is a good number. And I hope we all, as I did, learn a lot from this discussion and exchange of views. And obviously, there is much more to get to know about. And knowing how great a contribution SMEs give to our respective GDPs, I think we should continue to pursue in Accra how to strengthen the SMEs' access to financing through our credit rating assignment. So thank you very much, everybody, and special thanks to our director, Mr. Muzaffar Ahmed, who is actually the event coordinator for this webinar. Again, thank you all, speakers, participants, and if you would like to have a copy of this of the presentations, I think they are available, and you can just ask our Mitch Velayo perhaps for a copy. And I don't know exactly what are the plans how to put this into our website, but we are accumulating all of these documents, and we will make them all accessible, available to all Accra members so that it can be helpful to you, because the information here is not just for today, but it's also good for tomorrow and days to come. Again, thank you very much, and God bless you all.
Thank you.
Bye-bye.
Thank you.
Thank you.
Thank you all.
Assalamu alaikum.
Thank you.
Thank you.